almost about 7 odd %. Mr. Tulsian, you track GMR Infra closely. What did you make of the management's comments and what do you do with the stock?
See, Sonia, let me quickly give the background. Madhu has referred all these things. If you see the track record of GMR Infra, when they started, when they acquired Intergen, actually the problem started happening since then. Those were the overseas assets, gas-based projects and all that, and they have never been able to overcome that. And, now there is no point in, confusing on the standalone basis or on the investment entity. The hard fact is that 42,000 crore is the debt of the company on a consolidated basis. Take the market cap of 11,000 crore, it gives you enterprise value of 53,000 crore. The whole company's focus was earlier on the airports. They have huge land. They have 250 acres monetizable land, which they can monetize 5% of the Delhi airport is about 5,200 acre. They have only, monetized about maybe 70, 80 acres, number one. Number two, they have not been able to do anything on the Hyderabad. Even if they have started the MRO projects, the hotels and all that, and maybe the duty-free shopping, they wanted to raise their, I can, go on and, keep on this one. But the main focus, they have shifted into the roads and power generation. What happened in this last couple of years, they have totally exited from road. They realized at maybe about 3-4 years back, Anush, they were very possessive that we have EBITDA margin of 70-80% on road and all that. They have realized their mistake. But now what is happening here, even if I'm 100% sure that this debt is going to get converted. Firstly, I don't understand the logic of 60 years tenure of a loan, because the concession agreement of the Delhi airport will expire after 52 years, or because that is initially 30 plus 30, 6, 7, 8 years have already elapsed. So I don't understand this logic. But even if you presume that conversion happens at 23, 24 rupees, what is the situation? You are paying 1,000 crore rupees interest every quarter. So where the money has gone? If you make a chart on every 6 months basis, the debt has kept on piling up. It has not reduced, maybe by 500 crores. So this is, see, we are all trying to say that, okay, we have a very good pipeline. We have, been taking all the moves and all that. I'm grossly disappointed. In fact, the share is, I don't know what is the book value now. It's ruling at 16, 17. Market cap of mere 10,000 crore. If they would have capitalized the land at the earlier point of time, they were very hopeful on the aero, allowing them to charge those airport ADF and UDF, nothing has happened, nothing has happened. And in fact, they have to exit from everything, starting from Intergen, road projects, power projects. And ultimately, even if you see the airport where the capital employed is 15,000 crore. And on the roads, they have employed, on the power generation, they have employed 24,000 crore. So we know the state of, so I won't buy any of this argument of the management. I have been closely tracking this company for 5, 6, 7 years. In fact, I had the interactions with the management also, including Madhu. So I won't be able to.
So even at 16, it's not a buy.
No, it's not a. See, Anuj, if you are playing on a punt that 2370, I may give an argument that 2370 to hoga, because ultimately we know that it's going to get converted. So you buy on that premise. I won't play as a fundamental analyst on that theory.
All right, that's quite a risky call to take actually, but yes, must be cautious about GMR Infra.
Tulsian, of course, had some comments on GMR. It's only fair that we get the management as well to respond to that. Madhu Tredar is back with us. By the way, the GMR stock should come up now. It's down 12% now. So that really has been now the stock of the day. So 12% lower is what we have on GMR Infra. Madhu, you wanted to respond to some of the criticism that Mr. Tulsian had, and then we'll give Mr. Tulsian also an opportunity to ask you a question.
Yeah, I'll be very happy to answer Tulsian. I was quite a bit surprised to see comments from an enlightened analyst like Mr. Tulsian. Let us, how exactly a company can come out of the situation? By divesting assets as well as by diluting its own promoter shareholding stakes. The promoters have been so confident enough of first diluting so that they can come up always that. We are still holding 53 to 54%, even assuming this conversion happens, and we are in control of the things. We are 100% owners of the airport. We are 100% owners of the airport, now about 80% in the energy holding company. We are 64% in Delhi airport, possibly we may go to 74%. We are owning 63% in Hyderabad airport. In almost all the assets, we are either as a majority or almost 100% holdings. So it shows the confidence and how much capacity for the promoters are there to go and improve the balance sheet of the company. So this is the first point I want to make. Second point is Tulsian talked about the debt. If he can spend 2 minutes in analyzing, our net debt is 41,000 crores. In that net of 41,000 crores, 10,000 crores represents airport, completely it is risk-free. Another 6,000 crores is represented by the road sector, which is almost like a self-liquidating phase. It is either annuity or this thing. There may be some small problems in 1 or 2 projects like Ambala, Chandigarh, but it is a very insignificant compared to the overall. Then remaining amounts to around 21,000 crores in the energy sector and around 7,500 crores in the corporate.
Sure.
This is where the actual risk lies.
Okay, Madhu,
Now
you made your point. Madhu, you made your point. Let Mr. Tulsian respond to both your points.
Madhu, let me first quickly come on your point in regard to the increase of the promoters' stake increase in Delhi and Hyderabad. Madhu, let's understand that how you have been able to raise your stake in Delhi and Hyderabad. I'm not going here separately. I'll touch upon all the points quickly. That was under the 4 circumstances because the other promoters, maybe Freport, I won't be able to spell out the names of all those promoters. They wanted to exit from the company, from the project, and that is the reason. In spite of instead of selling those stakes to outsider, the promoter have bought it. Number 1. Number 2, if you quickly go into the business model of the company, how it has changed. What was GMR Infra? They were the first company as having qualified as the technical bidder, given the option by the government of India to choose between both the airports, Delhi and Bombay. GMR was having first choice. You all opted for Delhi airport. Investors have applied in your company or invested this as an airport stock. What you have done thereafter? You have moved into road, you have moved into power generations. What is the capital employed now? You have capital employed of 15,000 crore, as you have rightly said, while in power generations you have 23,000, 24,000 crore. Come on the power projects also. What has been happening in the power front? I am not talking of the gas-based power projects where you have all been stuck, but what has been happening in the thermal power projects also? You acquired some of the projects. Again, I won't go into the EMCO acquisitions, Chandrapur, that Nagpur. You have all been, given in the past that, okay, we will be revamping this, we will be recommencing this and all that, and sometimes you have said that we will be exiting out. Now come on the Intergen. When you acquired the Intergen assets for $1 billion about 6-7 years back, you exited at a loss. So I think, Madhu, if you just go by how the debt has been ballooned, it was at 15,000 crore maybe 4 or 5 years back, and at that point of time the promoter stake was 75%. Debt has ballooned now to 42,000 crore. And what has been happening in this last 1 year? You all raised about 2,400, 2,500 crore. But can you sustain when you have an interest liability of 1,000 crore per quarter? I don't think that how you can put that company back on the track. It is merely futile to say that the fresh money which is being raised will be used to retire the debt. That is not seen getting translated into your balance sheets. How you use yourself plot every year. No, Madhu, let me just quickly 2 minutes. I'll take less than 1 minute. So you quickly plot out. There is no point.
I only want Anuj to give me equally good time to respond to all your issues.
Okay, then I'll leave it the floor now because maybe I do not know the constraint of the channel. Madhu, you can take it over.
Okay, so Mr. Tulsian has raised some points now, Madhu, and it's up to you now. We just have about 2-3 minutes left in this discussion.
First of all, on one side, Tulsian is raising about debt. While the debt has gone up to 41,000 crores, our asset base from around 10,000 crores of asset base has moved to now 65,000 crores. Tulsian, as an analyst, you should not see only one side of the balance sheet. You should see both the sides of the balance sheet. Number 1, I do not know who has told you that the airport investors wanted to exist. It is completely incorrect. You have to check the facts. Airport investors wanted to continue. GMR Infrastructure had the option to buy at our terms, prefixed terms. So it is completely incorrect to state that their investors, airport investors, wanted to exist. Number 2. Number 3 fact is the airport business came after roads and the energy business. It is not the other way around. So when GMR investors put the money, GMR investors put the money in the GMR's competence, managements, promoters, corporate governance, not because we are doing airport businesses. The energy was first, afterwards roads, and after the airports came. So please do correct your facts about that. Number 4, Intergen, we never exited out of loss. Why InterGen per company when we invested, we simultaneously developed the island power which was known as the InterGen subsidiary, and we named it as GMR Singapore, GMR Energy Singapore, and we exited the investment out of 2,000 crores profit. So these are the facts, Mr. Tulsian.
All right, let's do one thing. Of course, this debate can keep going on, but
and one second, I have to give you some more figures. Since he has touched upon the numbers, it is good for me to give some of the figures.
Madhu, then we'll keep going on, Madhu. I mean, you responded to Mr. Tulsian. It's only fair that we end this discussion for now, and we'll of course,
give me
at
just
some point.
Only 1 second. Only 1 second I want to tell you. First of all, the conversion rate will happen at 18 rupees, almost about 20% premium to the rights as well as the 20% premium to the 3 months average part. Then secondly, and most importantly, our net debt to equity, which is important. Net debt to equity was on March 15, it was 4.58. It came down to 3.75 in September, and now after the post FCCB, now it will come down to 3.60. That is very important feature.
That's on enhanced equity, Madhu. Of course, we can keep going on and on this, and it will be never ending. For now, let's
happen only after 18 months.
Yeah. So let's end it here for now, and then of course we will have this discussion again between you and Mr. Tulsian at some point. For now, Madhu, thanks a lot.